Before we begin, a brief disclaimer. The content in this video is for informational and educational purposes only. It does not constitute financial, investment, or career advice. The experiences and opinions expressed are personal and may not reflect the views of any specific financial institution. Please consult with a qualified professional before making any financial or career decisions. It's 2 in the morning. Not on a wild Saturday but on a Tuesday. The only light in the room is the cold blue glow of 2 massive monitors, each one crammed with so many rows of numbers it looks like a glitch in the matrix. My eyes feel like they're full of sand. I've had so much coffee in the last 18 hours that I can feel my own heartbeat in my teeth. And then, an email notification flashes on the screen. It's from my managing director. The subject line has just 2 words. Please fix. The body of the email? It's empty. That's it. No explanation. No context. Just please fix. And in that moment, staring at a 100-page presentation that I know has to be absolutely perfect for a meeting in 6 hours, I have to become a financial detective and figure out what tiny imperceptible error a man who bills $1,000 an hour spotted in a 30-second scan. This wasn't a rare occurrence. This was my life. This was being an investment banking analyst in New York City. You see the headlines, a $50 billion merger, a tech company going public in a record-breaking IPO, a massive restructuring that saves a legacy brand from the brink of collapse. You see the pop culture portrayals, the slick, fast-talking characters in custom-tailored suits screaming into phones on a chaotic trading floor. You hear about the staggering salaries, the bonuses that can buy a supercar in cash. And it all boils down to one single nagging question: what do these people actually do to command that kind of money and power? What are they doing during those 100-hour work weeks? What is in that presentation that demands perfection at 2 in the morning? If you've ever asked that question, this video is your answer. We are going to pull back the curtain, turn on the bright, unflattering fluorescent lights, and show you the unfiltered, unglamorous, and deeply complex reality of what a U.S. investment banker does day by day, hour by hour. We're not talking about theory from a business school textbook. We're talking about the real, on-the-ground playbook. By the end of this, you won't just understand the job. You'll understand the mindset, the language, and the insane rhythm of a world that moves billions of dollars before most people have had their first cup of coffee. This is the deep dive you've been looking for. Whether you're a student dreaming of Wall Street, a professional in another field who's just curious, or someone who wants to understand the engine room of the global economy. Forget what you've seen in movies like The Wolf of Wall Street. That's sales and trading, a completely different universe focused on public markets. And it's not billions, which is the world of hedge funds and asset management. Investment banking is the advisory business. At its core, an investment banker is a corporate advisor. Companies, from the Fortune 500 giants you see every day to the scrappy tech startup that's about to change the world, come to bankers with their biggest, most critical problems and opportunities. Should we buy our biggest competitor? How do we raise $1 billion to build a new factory? Are we ready to sell the company my grandfather started? What is our company even worth? These are monumental, bet-the-company decisions, and the investment banker's job is to provide the brutally honest, data-driven analysis and strategic advice to guide them to the right answer. And the junior banker, the analyst, the associate, is the person who builds the foundation for all of that advice. They are the grinders, the ones in the trenches. Their primary weapon isn't a phone. It's Microsoft Excel and PowerPoint. Their life revolves around 3 core products: the financial model, the valuation, and the pitch book. That's it. That's the holy trinity. Everything they do, every late night, every canceled plan, every please fix email, is in service of perfecting those 3 things. So, to truly understand it, we're going to live it. We're going to walk through a composite day in the life of a first-year analyst at a major Wall Street firm. This isn't a dramatization. It's a synthesis of thousands of days just like it, lived by me and by my colleagues. We'll start the clock when the first alarm goes off, and we won't stop until the Uber ride home in the dead of night. We'll cover the fire drills, the client calls, the all-nighters. We'll decode the jargon. What is a comps model? What does it mean to spread a comp? What is a bake-off? What is the real purpose of a pitch book? You're going to learn the language of the street. The journey begins not in a gleaming skyscraper, but in a small, overpriced apartment, in the dark. The first alarm goes off at 5:30 a.m. It's a brutal, soul-crushing sound. But you don't hit snooze. You can't. Because the first thing you do before your feet even touch the floor, before you even think about coffee, is grab your work phone. In my day it was a BlackBerry, its red notification light blinking like a tiny malevolent eye. Today it's an iPhone, but the principle is the same. You are immediately checking emails that have been flying in overnight from your firm's offices in Hong Kong, London, and Dubai. You're looking for bombs. Has a deal in Europe blown up? Did a client in Asia send over new data that completely invalidates the model you spent the last 36 hours building? Your day can be completely derailed before it has even officially begun. This initial 5-minute scan determines your entire trajectory. Will you be fighting fires all day? Or can you stick to your original to-do list? Let's say this morning it's relatively quiet. A few updates from the London team on a deal, but nothing catastrophic. You can breathe, but it's a shallow breath. The relief is temporary because you know the calm is an illusion. You have about 20 minutes to shower, throw on a suit, your uniform, your armor, and get out the door. There's no time for a real breakfast. Maybe you grab a protein bar you'll eat on the subway. As you're walking to the station, you're not listening to music or a podcast. You're already scrolling through the Wall Street Journal and the Financial Times on your phone, absorbing the market's overnight pulse. What did the Nikkei do? What are oil futures looking like? Who announced an acquisition while you were sleeping? You have to walk into the office knowing the landscape. You have to be prepared for that random question your vice president might throw at you in the elevator. Being uninformed isn't just embarrassing. It's a sign of weakness. It shows you're not all in. And in this world, you have to be all in. You step off the subway into the canyons of Lower Manhattan or Midtown. You're surrounded by thousands of other young people in identical suits. A river of dark wool and ambition flowing towards the glass towers. There's a strange energy in the air. A mix of caffeine, anxiety, and the hum of immense capital. You get to your building, swipe your badge, and the elevator whisks you 60 floors into the sky. The view is incredible. A god's-eye perspective of the city. But you barely notice it anymore. You step onto your floor. It's 6:45 a.m. The vast, open-plan office is quiet, but not empty. The senior bankers, the managing directors and vice presidents, won't be in for another hour or two. But the bullpen, the area where the analysts and associates sit in long rows of desks, is already dotted with life. These are your fellow grinders, the ones who also got in early to get a head start on the tsunami of work that's about to hit. You nod to a few of them. The camaraderie is real, forged in the shared trauma of sleepless nights and impossible deadlines. You get to your desk, fire up your monitors, and take the first sip of what will be many cups of office coffee. And then you open your email. And there it is. The first real task of the day. Sent from your associate at 11:45 p.m. last night. The subject line: Morning task, respreading comps. And your day has officially begun. Respreading comps. Let's be honest, that phrase sounds like complete gibberish. It sounds like something you do to a bed, or maybe some kind of weird gardening technique. But in the language of Wall Street, those 3 words are your entire world for the next 2 hours. They are the financial equivalent of a surgeon being told to re-sterilize all their instruments right before a major operation. It's tedious, it's frustrating, and it has to be perfect. So what does it actually mean? Let's break it down. Comps is short for comparable company analysis. This is the bedrock of investment banking valuation. It's the first thing you learn, and it's something you will do in some form every single day of your life as a junior banker. Imagine you want to sell your local coffee shop. You have no idea what it's worth. How do you figure out a price? Well, you'd probably look around town. You'd find a few other coffee shops that are similar to yours. Similar size, similar number of customers, maybe they sell a similar amount of artisanal avocado toast. You'd find out what they sold for, or what they're valued at. Then you'd use that information to put a price on your own shop. That's it. That is all comps are. We're just comparing apples to figure out what an apple is worth. Except, in investment banking, the apples aren't coffee shops. They're 100 million or often billion-dollar public companies. And you're not just looking at their sale price. You're looking at everything. Their revenue, their profit margins, their growth rates, their debt levels, their enterprise value, their stock price, their price-to-earnings ratio, their EV to EBITDA multiple. You get the idea. It's a massive, sprawling list of financial metrics that you use to create a detailed snapshot of an entire industry. You build this massive, beautiful, color-coded spreadsheet. It has maybe 20 companies across the top and 100 financial metrics down the side. This spreadsheet, this comp spread, becomes a Bible. It's the source of truth. When your managing director is on the phone with the CEO, and the CEO asks, "What's the average EBITDA margin for my competitors?" Your MD is going to look at your spreadsheet to get the answer. When the team is building a valuation model for a potential merger, they are going to pull numbers directly from your spreadsheet. So when that email says respread the comps, it means something is wrong with the Bible, or more likely something has changed. The associate's email explains. Last night after you left, the client, let's say it's a big software company looking to be acquired, decided they want to add 3 new, obscure international competitors to the analysis. And they want to remove 2 of the old ones because they feel they're not a good fit anymore. This isn't a simple copy and paste job. This is financial archaeology. For each of those 3 new companies, you have to go on a digital scavenger hunt. You have to dive into the deepest, darkest corners of the SEC's Edgar database. You're looking for their official financial filings, their 10K, which is their big annual report, and their 10Q, their quarterly report. These documents are hundreds of pages long, filled with dense legalistic language and endless tables of numbers. Your job is to be a detective. You're not just pulling the headline revenue number. You need to find the exact right number. You need to read the footnotes. See, in this footnote on page 147, it says their reported revenue includes a one-time gain from selling a factory in Estonia. That's not part of their core business. It's a fluke, so you have to manually back that out. You have to normalize the data so you're truly comparing apples to apples. Did they change their accounting method halfway through the year? You have to find that and adjust for it. Did they report their numbers in euros? You have to convert every single line item to US dollars using the correct historical exchange rate for that specific time period. For 2 straight hours, this is your universe. Your world shrinks to the size of 2 monitors. On one screen, a 200-page legal document. On the other, your Excel model. You are meticulously, painstakingly transferring numbers, cell by cell, B14, C14, D14. You're checking them, double-checking them, triple-checking them. Your fingers fly across the number pad. The silence of the early morning office is broken only by the rhythmic click-clack of your keyboard and the low hum of the servers. This is the unglamorous reality. There's no shouting on a trading floor. There are no high-stakes negotiations. It's just you, a mountain of data, and the burning need for perfection. Because you know with absolute certainty that if you get one number wrong, one single cell, if you accidentally link to the wrong line, or you miss a footnote and forget to exclude that one-time gain, the entire valuation could be off by millions of dollars. Your associate will find the mistake. Your vice president will find the mistake. And you will look like an idiot. Or worse, you won't find the mistake and the client will. And that's a nightmare you don't even want to think about. So you grind. You drink more coffee. You check your work again. You update all the averages, the medians, the high and low values at the bottom of the spreadsheet. You reformat the new columns so they match the old ones perfectly. The exact same shade of blue, the same font size, the same border style. In banking, presentation is everything. An ugly spreadsheet implies sloppy work. And sloppy work is unacceptable. Finally, at around 8:15 a.m. it's done. The new comp spread is a work of art. It's a symphony of data, perfectly organized, completely accurate, and ready for prime time. You attach it to an email, and you write a subject line that is a masterclass in corporate brevity. Something like, re-morning task, re-spreading comps. And in the body, just 2 letters, FYI, which stands for your information. But what it really means is, it's done. It's perfect. Please don't ask me to do it again. You hit send. A wave of relief washes over you. The first fire of the day has been extinguished. You take a deep breath, lean back in your chair, and allow yourself a 30-second break to stare out the window at the city waking up below. You feel a small sense of accomplishment. You've already done more meticulous, high-stakes work than most people will do in an entire day. And it's not even 8:30. You take a sip of your now cold coffee. And just as you put the mug down, your desk phone rings. You don't recognize the number, but it's an internal line. You pick it up. The voice on the other end is sharp, impatient, and belongs to a managing director you've never spoken to before. He doesn't say hello. He doesn't say his name. He just says, "My office. Now, bring a notepad." And then he hangs up. Your heart is suddenly trying to beat its way out of your ribcage. A notepad. You grab the first yellow legal pad you see, your hand shaking slightly. The pen you snatch is a cheap plastic one, not the nice firm-issued one you usually use. It doesn't matter. Nothing matters except the 3 words echoing in your head. My office. Now, you stand up. Your VP, the guy who actually manages you, looks up from his screen, a question in his eyes. You just shake your head, a slight, almost imperceptible motion that says, "I don't know, but it's not good," and start walking. The floor plan of a bank is a physical manifestation of the hierarchy. You, the analyst, are in a bullpen. A sea of identical desks, multiple monitors, and low cubicle walls. It's loud, it's crowded, it's the engine room. To get to the managing director's offices, you have to walk the gauntlet. You pass the associates' slightly larger cubicles, then the VP's offices, which have glass walls, offering the illusion of privacy. Finally, you reach the perimeter of the floor. This is where the air changes. The carpet is thicker. The noise of the bullpen fades to a respectful hum. This is managing director territory. Corner offices with solid wood doors and million-dollar views of the city. You've never been summoned to one of these before. You find the nameplate. It matches the name from the firm directory you frantically pulled up on your phone during the walkover. You knock. A deep voice barks. "In." You push open the heavy door and step inside. The office is bigger than your first apartment. One entire wall is a floor-to-ceiling window overlooking the entire financial district. Bookshelves line another wall, filled not with finance textbooks, but with leather-bound classics, histories of war, and biographies of presidents. On the wall behind the massive mahogany desk, there are framed tombstones, lucite blocks commemorating the billion-dollar deals he's closed. They are his trophies. And then you see him. He's not looking at you. He's on the phone, one hand holding the receiver, the other swirling the ice in a glass of what looks like water, but you know probably isn't. He's older, maybe late 50s, with silver hair and a suit that costs more than your monthly rent. He doesn't gesture for you to sit. So you stand there in the middle of the room, legal pad in hand, feeling like a child who's been called to the principal's office. He finishes his call, not by saying goodbye, but by saying, "Make it happen," and slamming the phone down. He finally looks at you. His eyes are like chips of ice. "You know why you're here?" he asks. It's not a real question. "No, sir." "Good. Means it's still quiet." He leans forward, steepling his fingers. "I have a client. An old-world industrial. Think steel, railroads, concrete. A giant. They've been sleeping for 20 years. But the new CEO wants to hunt. He wants to buy technology. He wants to buy the future because he knows he doesn't have one." He pauses, watching you, gauging your reaction. You just nod, trying to absorb every word. "There's a company," he continues, his voice lowering slightly. "A publicly traded software firm out on the West Coast. They make logistics and supply chain optimization software. AI-driven. Brilliant stuff. They're a market darling. High growth, high multiple. Their founders are still involved. Think they're changing the world." He smirks. "They are. They just don't know who they'll be changing it for." He slides a single sheet of paper across the vast desk. It's blank except for a stock ticker. "That's them. Project Nightingale. That name does not leave this room. It does not get typed into an email. It does not get spoken over the phone. You don't even write it down on that ridiculous pad you're holding. You burn it into your brain." "Got it." "Yes, sir. My client wants to know what it would take to buy them. Not a friendly merger. A hostile bid. A public bear hug. We go straight to the shareholders. We offer them a premium so high it'll make their heads spin. And we rip this company right out of the hands of those Silicon Valley idealists." Your mind is racing. This is the stuff you read about in books. This isn't a routine financial model. This is corporate warfare. "Here's what I need from you," the MD says, his tone shifting from storyteller to commander. "I need a book. By 7 a.m. tomorrow. Not a full pitch. A black book. Internal use only. I want to see every possible angle." He starts ticking points off on his fingers. 1. A full valuation. "And I don't want some cookie-cutter DCF you learned in training. I want a football field chart that shows me everything. Public comps, precedent transactions, a leveraged buyout analysis assuming we load them with debt, a discounted cash flow with 3 different growth scenarios, base case, upside, and management gets hit by a bust case. I want to see the valuation from every conceivable angle." 2. The premium analysis. What have similar hostile deals priced at over the last 10 years? What premium do we need to offer to be taken seriously? What's the number that makes their board have a fiduciary duty to consider it, even if they hate our guts? 3. Synergies. This is the hard part. How does a 100-year-old steel company synergize with a software firm? You're going to have to get creative. Think bigger. vertical integration, capturing data, turning dumb assets into smart assets. Don't give me fluff. Give me numbers I can defend. 4. The shareholder analysis. Who owns them? Are they patient venture capital funds who believe in the mission? Or are they flighty hedge funds who will sell their own grandmother for a 20% premium? I need to know who our audience is. And finally, he says, leaning back in his chair, the response. How will they fight back? What's their defensive playbook? A poison pill? A white knight? I want you to think like them. What would you do if a dinosaur was trying to eat your lunch? I need a section on their likely defensive measures and our countermoves for each one. He stops. The silence in the room is deafening. The scope of the task is staggering. This isn't a one-person job. This is a team's job. For a week. Not one analyst overnight. The team that usually covers this sector is slammed on another live deal. He says, as if reading your mind. They can't be distracted. And I don't want this leaking. The circle of trust on Project Nightingale for now is you, me, and the client. You have access to every data resource the firm pays for: FactSet, Bloomberg, Capital IQ. You have the firm's car service at your disposal. You can order any food you want. What you don't have is time. He stands up, a clear dismissal. I'm presenting this to my client's CEO tomorrow at 9 a.m. I'll be in at 6:30. I want a printed bound copy on my desk, and I want you ready to walk me through it slide by slide. Don't disappoint me. You can only manage a nod. I understand, sir. You turn and walk out of the office, pulling the heavy door shut behind you. You stand in the quiet, carpeted hallway for a second, your knuckles white as you grip the legal pad. Your heart is no longer pounding with fear. It's pounding with something else. A terrifying, exhilarating surge of adrenaline. This is it. This is the moment you've been working for. The 100-hour weeks, the missed birthdays, the canceled plans. It was all a prelude to this. A single night to prove you belong here. You walk back toward the bullpen. The noise gets louder with every step. People are laughing, complaining, typing furiously. They have no idea what just happened in that corner office. You sit down at your desk. The half-finished PowerPoint from this morning is still on your screen. It seems trivial now, like a project from a different lifetime. You close it without saving. You open a new blank presentation. A blank Excel model. You look at the stock ticker on the scrap of paper. Then you look at the clock on your screen. It's 7:15 p.m. The sun has set. Your day isn't ending. It's just beginning. The first thing you do is create a folder. You name it Project Phoenix, the code name for the deal. Inside, you create 2 subfolders, internal and client. It's a small act of organization, a desperate attempt to impose order on the chaos that's about to unfold. Your first target isn't the complex financial model. It's the presentation, the deck. Because in banking, the story comes first. The numbers just have to support it. You create a title slide. Your client's logo on the left, the targets on the right. An arrow between them. Project Phoenix, preliminary valuation analysis. You add the date. You add the highly confidential footer. This is your canvas. But to paint the picture, you need the paint. And the paint is data. Cold, hard numbers locked away in dense legal documents. You open your web browser and go to the SEC's Edgar database. It's the government's massive, clunky, text-filled repository of every public company's filings. It looks like a website from 1998, but it is the source of truth. You type in the target company's ticker. A long list of 10KS, 10QS, and 8KS appears. Annual reports, quarterly reports, and current event reports. This is your Bible for the next several hours. You start with what's called spreading comps. It's a deceptively simple name for a soul-crushing task. The idea is to find a group of publicly traded companies that are as similar to your target as possible. Same industry, similar size, similar growth prospects. It's like valuing a house by looking at what similar houses on the same street sold for. Except these houses are billion-dollar corporations, and the street is the entire global market. Your associate already emailed you a list of 10 potential comparable companies. Your job is to become an expert on every single one of them right now. You open the first company's most recent 10K, their annual report. It's a 200-page behemoth of legalese, risk factors, and financial statements. You don't read it. You hunt. You're a digital predator, stalking specific numbers. Revenue, gross profit, EBITDA, earnings before interest, taxes, depreciation, and amortization. a key metric for a company's operational performance. Net income, total debt, cash on hand, shares outstanding. You use Control F like a weapon searching for keywords. You navigate the labyrinthine tables of the income statement, the balance sheet, the cash flow statement. Each number you find you plug into your Excel model. One by one. Revenue for company A check. EBITDA for company A check. Now do it again for company B. And C. And D. The numbers start to blur. 5,432.7 million. Or was it 5,342.7? You double check. You have to. A single misplaced decimal, a single transposed digit, can throw off the entire valuation. Your MD might see it, your client might see it, and your life will become a living hell for a mistake that took a fraction of a second to make. The pressure to be perfect is absolute. This isn't strategic thinking. This isn't the high-flying, master of the universe work you see in movies. This is a grind. It's a high-stakes, high-paying data entry job. You're listening to a focused playlist on Spotify, the same electronic beat looping for the last hour, but you barely hear it. You're in the zone. The world shrinks to the size of your two monitors. The PDF on the left, the Excel on the right. Find the number. Input the number. Find the next number. It's now 9:30 p.m. Your stomach growls. You remember the seamless order. You get up, walk to the deserted kitchen area, and find your sad, lukewarm bag of food. You bring it back to your desk and eat while you work. One hand on the fork, the other on the mouse. You're scanning a footnote about pension liabilities while chewing on a piece of chicken parmesan that has the consistency of a tire. You don't taste it. Food is just fuel. As you're digging through the fifth company's filings, an instant message pops up from your associate. Hey, can you hop on a quick call? There is no such thing as a quick call at 9:30 p.m. You close your office door and dial in. It's the associate and the vice president. The VP's voice is sharp, impatient. Just looking at the shell you sent over. The title slide. It's fine, but I think we need to frame this differently. Instead of just evaluation, let's call it Project Phoenix. A platform for transformational growth. It's more strategic. It tells a better story. You're thinking, it's a title slide. No one cares. But you say, okay, that makes sense. Platform for transformational growth. Got it. Great, the VP says. Also, I was thinking, before we even get to the valuation, we should have a few pages on the macro environment. What are the tailwinds in this industry? What's the projected market growth over the next 5 years? Find a few third-party research reports, Gartner, Forrester, whatever, and pull some killer stats. I want big numbers. I want to show the client this is a massive opportunity they can't afford to miss. Can you add that in? He says it like it's a 5-minute task. You know it's not. It's a research project. It's hours of sifting through 100-page reports to find the 2 or 3 charts that tell the story he wants. He's not asking you to find the truth. He's asking you to find evidence for his truth. You say, yep, no problem. I'll get on that. The call ends. You stare at your screen. You haven't even finished the first, most basic task, and now you have a new one. A fire drill. You have to switch gears immediately. You close the SEC filings and open your bank's research portal. You type in keywords, North American logistics market size, 3PL industry growth. You download 3 different 80-page reports. Your heart sinks a little. The to-do list in your head just got longer. But first you go back to the PowerPoint. You delete, preliminary valuation analysis. You type the new title, Project Phoenix. A platform for transformational growth. You look at it. Does sound better. Sounds more important. More expensive. That's the whole point. It's 10:15 p.m. You get back to the comps. You've got 5 more companies to go. As you're inputting the data for company H, you notice something strange. Their revenue grew by 40% last year, while every other competitor grew by about 10%. That's a huge outlier. Why? You can't just put the number in and move on. You have to understand it. You have to know the story behind the number. You start digging. You go back to their 10K, but this time, you read the management's discussion and analysis section. You're a detective now looking for clues. And then you find it. A single sentence buried on page 47. The increase in revenue was primarily driven by the successful acquisition of a major competitor in the second quarter. Ah, there it is. They didn't grow organically. They bought their growth.
Disclaimer. The information presented is for informational purposes only and is not professional financial, investment, or tax advice. All investments involve risk and may result in partial or total loss. You should always conduct your own research and consult with a qualified financial professional before making any financial decisions. By viewing this video, you agree not to hold the creator liable for any loss or damage arising from your use of the information provided.
That context is everything. When you present these numbers, you can't just show that company H grew at 40%. You have to explain why. Because the client will ask, the MD will ask, and if you don't have the answer, you look like an idiot. You make a note in the Excel cell. Growth driven by M&A, not organic. This is the real job. It's not just moving numbers from a PDF to a spreadsheet. It's about understanding what they mean. It's about finding the narrative hidden in the data. Every company, every number has a story. And your job is to uncover it, piece it together, and then retell it in a way that convinces someone to spend $1 billion. Finally, just after 11:30 p.m., you finish spreading the comps. 10 companies, dozens of data points for each, all meticulously checked and sourced. Your Excel grid is a beautiful, terrifying tapestry of numbers. From this, you can calculate the valuation multiples, enterprise value to EBITDA, price to earnings. This will form the bedrock of your analysis. It's a major milestone for the night. You lean back in your chair for the first time in hours, stretching your arms over your head. You feel a small sense of accomplishment. Then, an email from the managing director hits your inbox. The subject line has only one word: urgent. Your heart doesn't just sink, it plummets. That single word is a siren, a declaration that your evening, your night, and quite possibly your sanity are no longer your own. Urgent from a managing director isn't a request for a quick look. It's a full-scale mobilization. It means a client is on fire, a deal is in jeopardy, or an opportunity is closing, and you are the bucket brigade. You click open the email. The body is as brief as the subject. No salutation. No please. Just a link to a news article and a single sentence. Client's main competitor just announced a bid for our target. Need a full impact analysis and revised deck for a 7 a.m. board call. Now, a cold wave washes over you. The target. The company you've spent the last 3 weeks dissecting. The company whose financials you know better than your own. A competitor just made a public offer to buy them. This is the nuclear option in the world of mergers and acquisitions. It's a hostile move designed to preempt your client, to scare them off, to win the prize. And that revised deck for a 7 a.m. call? That carefully crafted 100-page PowerPoint you just finished is now mostly garbage. The adrenaline hits you like a shot of espresso straight to the heart, clearing the fog of fatigue. This is it. This is the moment you see in movies, the moment that justifies the obscene hours and the monk-like existence. This is where fortunes are made or lost, and you're at ground zero. Your first move isn't to the model. It's to the news. You open the article. It's all there in black and white. The competitor, a massive conglomerate, has offered a 30% premium over the target's current stock price. A 30% premium. That's an aggressive, take no prisoners offer. Your team had modeled a potential offer at a 15, maybe 20% premium to be competitive. This new bid blows your entire valuation out of the water. Your fingers fly across the keyboard, pulling up the competitor's official press release, their SEC filings. You need the specifics. Is it an all-cash offer? A mix of cash and stock? What are the financing conditions? What's their stated rationale? You're a detective now, piecing together clues from dense, legalistic documents under the crushing weight of a deadline that's less than 8 hours away. Your associate appears at your desk, phone pressed to his ear, his face pale. He's been on the phone with the vice president, who's been on the phone with the MD, who is almost certainly on the phone with the client's CEO. The chain of command is electrified with panic. He hangs up and looks at you, his eyes wide. You see it? He asks. You just nod, pulling up the press release on your screen. Okay, he says, taking a deep breath, trying to project a calm he absolutely does not feel. Here's the plan. We need to do 3 things all at once. First, we need to rerun the valuation. All of it. The DCF, the public comps, the precedent transactions. This 30% premium changes everything. We need to know if the competitor is overpaying, or if we were massively undervaluing the target. He points to your model. Second, the accretion/dilution. Our entire thesis was that this deal would immediately increase our client's earnings per share. At this new price, is it still accretive? Or does it become dilutive? meaning it actually destroys shareholder value? The board will crucify us if we recommend a deal that makes their stock worth less. Third, he says, pacing behind your chair, we need a new story, a new strategy. The old pitch is dead. What are the options now? Do we advise our client to make a higher bid and start a bidding war? Do we walk away and let the competitor have them? Or is there a plan B? Another target we can pivot to? We need to have answers. We need to look like we've been thinking about this for weeks, not for the last 20 minutes. And so the real work begins. The next few hours are a blur of frantic, focused intensity. You tear open the financial model. That intricate machine of spreadsheets and formulas you so carefully built is now being ripped apart. You update the offer price. You change the assumptions for the financing. You have to find a new set of precedent transactions, other similar deals that have happened, that were done at these new inflated sky-high valuations, just to make your numbers seem sane. Every time you hit recalculate, the entire model shudders. The output screen flashes with new figures. The valuation range skyrockets. The once beautifully accretive deal now flashes a nasty, negative red number. It's dilutive. It's a bad deal at this price. This is a critical piece of information. Your client can't just match the offer. It would be financial suicide. At 1 a.m., you send the first draft of the new analysis to the associate. It's just a raw Excel file, but it tells the story. He's at the desk next to you, already working on the new PowerPoint slides. He takes your numbers and starts plugging them into charts and tables. At 2:30 a.m., the first version of the new deck is sent up the chain to the vice president, who is working from his home office. 10 minutes later, his feedback comes back. The email is a wall of text. The slide titles are wrong. The chart colors are off-brand. He questions one of your sources for a key assumption. He wants a new sensitivity analysis, table showing how the deal's profitability changes if interest rates go up, or if the target's growth slows down. He wants it for 5 different scenarios. Feels like a punch to the gut. You've been working at a dead sprint for 5 hours and it's not even close to good enough. There's no thank you or good work. There is only a demand for more. More data. More analysis. More perfection. You dive back into the model. Building the sensitivity tables is tedious manual work. You create a new tab, link the cells, and begin plugging in hundreds of different combinations of assumptions, copying and pasting the results one by one. Your eyes burn from staring at the screen. The numbers start to swim together. A meaningless sea of digits. You double and triple check everything, because a single misplaced decimal point in this deck could mislead the board of a Fortune 500 company and kill a multi-billion-dollar transaction. The pressure is immense. By 4 a.m., version 2 of the deck is ready. You and the associate have rebuilt the narrative. The first section now clearly shows that the competitor's offer is too high and would be a disastrous move for your client to match. The next section, the crucial one, outlines the new strategy. You've identified 3 smaller, less obvious acquisition targets that could deliver similar strategic benefits without the ruinous price tag. You've had to do a miniature back-of-the-envelope valuation for each of these 3 new companies in the last hour. It's messy, it's rushed, but it's a plan. It's a lifeline you can offer the client. The deck goes up the chain again. The feedback this time is faster, more frantic. The MD is awake now, and he's CC'd. His comments are sharp, precise. This chart is confusing, simplify it. Page 12, the messaging is weak. We need to be more forceful on why a bidding war is a bad idea. Where's the analysis on the potential stock market reaction for our client if they walk away? A new request. Another frantic scramble. You have to analyze stock price movements of other companies who lost a bidding war. Did their stock go up because the market thought they were being disciplined? Or did it go down because they were seen as losers? You're pulling data from the Bloomberg terminal, throwing it into Excel, trying to find a pattern and answer anything that can support your recommendation. It's now 5:30 a.m. The sun hasn't even thought about rising yet, but the lights of the office tower burn with an unnatural, sleepless intensity. You're operating on pure adrenaline. You've ingested so much caffeine you can feel your own heartbeat in your ears. Version 5 of the deck is on your screen. It's leaner, sharper, more powerful. The story is clear. The analysis is, against all odds, solid. The associate is on the phone with the print shop in the basement, telling them to stand by for a pencils down command. They'll need to print 20 copies of the final book, bind them, and have a courier race them to the client's headquarters before the 7 a.m. meeting. You're not just an analyst anymore. You're part of a machine. a rapid response unit for corporate warfare, fueled by coffee and fear. And in the middle of this chaotic, sleep-deprived, high-stakes ballet, a strange thought crosses your mind. This is completely insane. And this is exactly what you signed up for. Because now the abstract chaos of the morning condenses into a single, terrifyingly specific point of focus. A file lands on your desk, or more accurately, an email with a dozen attachments lands in your inbox with the force of a physical object. The subject line is just one word: Project Phoenix. The body of the email is from your vice president, and it's a masterclass in corporate minimalism. Need a full valuation model and a 50-page deck on this. MD wants to see a draft by 6 p.m. Let's move. And just like that, the starting gun fires. Your world shrinks to the 24 inches of your primary monitor, the keyboard, and the mouse. This is the part of the job that no one outside of this world truly understands. They see the headlines, the billion-dollar deals, the fancy dinners. They don't see this. They don't see the digital trenches where these wars are actually fought. Your primary weapon isn't a golden Rolodex or a silver tongue. It's Microsoft Excel. But this isn't the Excel your parents used to balance their checkbook, or the one you used in college to make a simple bar chart. This is Excel as a god-tier weapon. Your spreadsheet is a sprawling digital metropolis, a labyrinth of interconnected cells, formulas, and macros. It's a living document, a financial simulation of a real-world company. A single misplaced decimal point, a single broken link in a formula, could cascade through the entire model, turning a brilliant acquisition into a catastrophic failure. The pressure to be perfect isn't a suggestion. It's a baseline requirement. Your fingers fly across the keyboard. You're not even using the mouse. The mouse is for tourists. Real analysts navigate Excel with a dizzying sequence of keyboard shortcuts. Alt-H-O-I to autofit columns. Alt-ESV to paste values. It's a language in itself, a staccato rhythm of clicks and clacks that is the official soundtrack of Wall Street. You are a concert pianist, and your symphony is a discounted cash flow model. Next to your main screen is the Oracle, the Bloomberg terminal. With its iconic black and orange interface, it looks like something out of a 1980s sci-fi movie. But this machine is the central nervous system of global finance. It's a fire hose of real-time data, news, and analytics. You query it with cryptic commands, pulling financial statements, analyst reports, and market data for your target company and its competitors. You're looking for the puzzle pieces. Who are the comparable companies? What have similar businesses sold for in the past? This is the first major task. Running the comps and precedents. Sounds simple. It's not. Finding comparable companies is more art than science. You can't just compare Coca-Cola to Pepsi. You need to find companies of a similar size with similar growth profiles in similar markets with similar capital structures. You're trying to answer a simple question. What is this company worth? And you're answering it by saying, well, what are other companies like this one worth? It's like trying to price a one-of-a-kind mansion by looking at every other house sold in the state for the last 10 years. You pull the data, scrub it, normalize it for different accounting standards, and then calculate the key multiples, enterprise value to EBITDA, price to earnings, and a dozen others. Each number tells a part of the story. Then you run the precedents. This is a historical exercise. You're a corporate archaeologist, digging through the graveyard of past deals. What did private equity firms pay for similar companies 2 years ago? What was the strategic premium a major competitor paid for a smaller rival last quarter? You're looking for patterns, for a defensible range. Every number you produce will be scrutinized, attacked, and questioned by your superiors. Your job is to build a fortress of data so strong that it can't be torn down. All of this data, this mountain of numbers, flows into the heart of the operation, the model. Building a financial model from scratch is like constructing a skyscraper in a hurricane. You're forecasting a company's revenue, expenses, and cash flow for the next 5 to 10 years. Think about that. You're trying to predict the future. You're making hundreds of assumptions. What will inflation be in 2028? Will this company's new product line succeed? Will their main competitor go bankrupt? Every assumption is a potential point of failure. Your VP will challenge every single one. Why are you assuming a 4% growth rate? The market is slowing down. Make it 3.5%. Your margin assumptions are too aggressive. Pull them back 50 basis points. Each change sends ripples through the entire model. You tweak one number and 100 others change instantly. The final valuation might swing by hundreds of millions of dollars based on a single seemingly tiny assumption. This is where the real alchemy happens. You're not just crunching numbers, you're crafting a narrative. The model is the quantitative backbone of the story you're going to tell the client. The story of why they should, or shouldn't, buy this company for billions of dollars. Sometime around 1:30 p.m., you realize you haven't eaten. Hunger is a distant, muffled signal easily ignored. But your body needs fuel. You don't go out. Going out is a luxury you can't afford. Instead, you do what every analyst does. You tap a few keys and order from the corporate Seamless account. 20 minutes later, a plastic container of lukewarm salmon and quinoa appears on your desk. You call this lunch. You eat it with one hand while your other hand continues to navigate spreadsheets. You don't taste the food. It's just input. You wash it down with another coffee, the fourth of the day. The caffeine isn't for energy anymore. It's just to maintain a functional baseline, to keep the fog of exhaustion from rolling in. As you're finishing your sad desk salad, your associate swings by. He's the first line of defense, the quality control sergeant. He leans over your shoulder, his eyes scanning your screen faster than you thought humanly possible. He's not looking at the big picture. He's looking for mistakes. A typo in a label. A formula that pulls from the wrong cell. A formatting inconsistency. He finds 3 in the first 10 seconds. This font is Calibri 10. The rest of the sheet is Arial 9. Fix it. You're linking to a hard-coded number here instead of the source tab. Sloppy. Your color coding for inputs is light blue, not turquoise. Check the style guide. This isn't nitpicking. This is the job. In a world where a misplaced comma can cost millions, precision is everything. The final product that goes to a client has to be flawless. Not just correct, but aesthetically perfect. Every font, every color, every border has to be uniform. It's a signal. It tells the client that if we pay this much attention to the formatting of a spreadsheet, imagine the attention we're paying to the multi-billion-dollar advice we're giving you. You make the corrections, your face burning with a mix of frustration and adrenaline. By 4 p.m. you have a first draft. A V1. It's a behemoth of a file. An Excel model with 20 interconnected tabs, and a bare-bones PowerPoint deck that outlines the preliminary findings. It's the skeleton of the final product. You've built the engine, but now it needs to be tested, refined, and polished until it gleams. You save the file, take a deep breath, and attach it to an email. The recipient is your VP. You hit send. And now, a new kind of anxiety begins. The waiting. For the next 30 minutes, you're in limbo. You try to get a head start on the next phase, but your focus is shot. Every fiber of your being is fixated on your inbox, waiting for the reply. You know what's coming. It's the moment of truth. The feedback. The comments. The turns, as they're called. The process of having your hard work systematically dismantled, questioned, and sent back for a complete overhaul. The silence is deafening. Then, finally, the notification pops up. A new email from the VP. Your stomach drops. You open it. The body of the email is, once again, brutally efficient. Good start. My comments are in the attached. Let's connect in 15 to discuss. A lot of work to do here. You open the attachment and your heart sinks. The PowerPoint slides are covered in a sea of red digital ink. The spreadsheet is littered with dozens of angry-looking comment boxes. It looks like a murder scene. And your night is just getting started. First, you take a deep breath. Panic is a luxury you can't afford. This isn't a massacre. It's a roadmap. A very, very messy roadmap written in the blood of your free time. The first rule of surviving comments is triage. You have to separate the paper cuts from the arterial bleeds. You open up a fresh spreadsheet next to the commented up PowerPoint. This is your command center, your to-do list. You start cataloging every single comment one by one. Column A, slide number. Column B, the comment itself. Column C, category. Column D, status. The categories are your first line of defense. You have formatting, wording, data check, and the one you dread most, conceptual. Formatting comments are tedious but straightforward. Logo is 2 pixels off-center. Please change this shade of blue to the approved corporate blue. Hex code #0033A1. Align all text boxes on this slide. This is the digital equivalent of digging a ditch with a teaspoon. It's mindless, soul-crushing work that a machine could do, but for some reason it's your job. You spend the next hour nudging logos, resizing charts, and ensuring every single footnote is in Times New Roman, size 8, non-italicized. It feels like a colossal waste of your Ivy League education, but get it wrong, and you'll get another email with the subject line PLS fix. Next, wording. These are a little more subjective. Your VP has crossed out your carefully crafted sentence. The company exhibits a strong potential for synergistic growth, and replaced it with, this acquisition will create significant synergies. Is it better? Maybe. Is it different enough to spend 3 minutes changing it? Doesn't matter. Your job isn't to be a poet, it's to be a mirror, reflecting the exact preferences of the person above you. You go through changing utilize to use, in order to, and making a dozen other tiny semantic changes that feel important to someone, just not you. Now it gets harder. Data check. These are the landmines. A comment bubble on a chart says, source for this number? You swore you had it. You dive back into the data room, a virtual labyrinth of thousands of corporate files. You search through folders named MISC, Project Sky Due Diligence for final, and Do Not Use. 20 minutes of frantic searching later, you find the number in an obscure appendix of a 300-page report. You screenshot it, paste it into an email for your VP as proof, and add the tiny source note at the bottom of the slide. Another comment asks, does this revenue number include the divestiture from Q3? Your heart skips a beat. Did you check that? You open the master Excel model, the beast. It's a sprawling universe of interconnected spreadsheets, with tabs for the income statement, balance sheet, cash flow, discounted cash flow analysis, and a dozen other scenarios. You trace the revenue figures back through a web of formulas, cell references linking across 5 different tabs. It's like performing financial archaeology. Thankfully, you did account for it. You breathe a sigh of relief. Catastrophe averted. But now you have to face the final boss. The conceptual comments. These are the ones that can derail your entire night. They aren't simple fixes. They're fundamental challenges to your work. A comment on your valuation slide simply says, these multiples feel high. Let's see a broader range of comps. That one sentence just casually created 3 hours of work. It means you need to go back to the drawing board. You log into Capital IQ and FactSet, the financial data terminals that are the lifeblood of any bank. You start screening for a new set of comparable companies, public companies that are similar to the one you're trying to sell. You screen by industry, by size, by growth rate. You pull their financial data, their stock prices, their enterprise values. You have to read through their public filings to make sure they're actually a good comparison. One company looks perfect, but then you realize half its revenue comes from a different business line. It's out. Another one is the right industry, but it's growing twice as fast. Out. After an hour of meticulous searching, you find 5 new companies that might work. Now you have to update the entire analysis. You plug their data into your Excel model. You recalculate all the valuation multiples. Enterprise value to EBITDA, price to earnings, enterprise value to revenue. You create new charts, new tables. You have to update the football field chart, which shows the valuation ranges from all the different methodologies. The whole narrative of the presentation might have to change. What was previously a clear by recommendation might now look more ambiguous. Another conceptual comment on a different slide reads, what's the story here? This is the vaguest, most terrifying comment of all. It means your VP looked at a slide full of data you spent hours compiling and had no idea what point you were trying to make. It's not a failure of data, it's a failure of storytelling. You stare at the slide. It shows the client's market share in 5 different regions over the past 3 years. You thought the data spoke for itself. Clearly it didn't. So you have to become a detective. What is the story? You look closer. Market share is declining in North America, but growing rapidly in Asia. And the growth in Asia is accelerating. That's the story. The company is pivoting. You can't just show the data, you have to frame it. You add a title, pivoting to high-growth Asian markets to offset mature North American operations. You add call-out boxes highlighting the key growth figures. You add a concluding sentence at the bottom explaining the strategic implication. You've transformed a page of numbers into a narrative. This is the actual value add of the job, but it's buried under a mountain of pixel pushing. It's 11:30 p.m. The office is a ghost town now, save for the hum of the servers and a few other analysts hunched over their desks and other cubicles, living their own parallel versions of your night. Your dinner, a sad-looking chicken teriyaki bowl you ordered hours ago, sits cold and half-eaten on your desk. You've been surviving on coffee and the adrenaline of looming deadlines. You're almost there. You've gone through every single comment on your checklist. You reread the entire presentation from start to finish, trying to see it through your VP's eyes. You check the page numbers. You check the confidential watermarks. You package it all up, save it as Project Sky Investor Presentation, _28_JPM_edits, to PDF. The version number V28 is a silent testament to how many times this document has been reborn. You attach it to an email. The subject, Revised Deck. In the body, you write a short, precise summary of the major changes you made, referencing his key comments. This shows you were paying attention. You write, "Please let me know if you have any further thoughts." It's a polite formality. You know you'll have further thoughts. You hover your mouse over the send button. This is the moment of truth. You click it. For a few minutes, there's a beautiful, terrifying silence. You did it. You survived the onslaught. You start to pack your bag, dreaming of the 45-minute subway ride home and the sweet embrace of your bed for a few hours of sleep. Then your computer chimes. A new email. It's from your VP. The subject line is just one word. Quick call. That question mark at the end is the cruelest part. It's not a command. It's an illusion of choice. A linguistic ghost of politeness hovering over what is, in reality, a non-negotiable summons. Your heart doesn't just sink. It plummets like a stone dropped down a dark well. Every analyst knows the unwritten rules. Quick call at 1 a.m. never means, "Hey, great job today, get some rest." It means, "I hope you haven't left the building, because your night is about to be sacrificed to the god of client services." You drop your bag. The thud echoes in the cavernous, empty office. You take a deep breath, trying to project a voice that sounds awake and alert, not like a sleep-deprived zombie who was just fantasizing about their pillow. You dial his extension. He picks up on the first ring. "Hey man, sorry to call so late." The apology is another part of the ritual. It's a token gesture, a social lubricant for the gears of a machine that is about to grind you down. You say it's no problem at all, a lie so practiced it feels almost true. "So," he begins, and you can hear the clicking of his keyboard in the background. He's at home, probably in a comfortable chair, but he's still working too. "I was just on the phone with the client. Their CEO is flying to London in a few hours for a breakfast meeting with a key investor. He got a little spooked about the valuation. Wants to see a more robust analysis on the synergies." You feel a cold dread creep up your spine. Synergies. That's the magic, almost mythical, number in any merger or acquisition. It's the value created by combining two companies that's greater than the sum of their parts. It's also the most subjective, most debated, and most easily attacked part of any financial model. The VP continues. He wants to see a full sensitivity analysis on the cost synergies. What happens to the deal's accretion/dilution if we only realize 75% of our projections? What about 50%? And he wants a new slide that benchmarks our synergy assumptions against the last 5 deals in this sector. He also mentioned wanting to see the valuation from a private equity perspective, so we need to throw in a basic LBO model. Your brain is frantically translating this into a to-do list. This isn't a tweak. This is a complete overhaul of the core analysis. A sensitivity analysis means creating a matrix of outputs based on changing inputs, showing the client a universe of possibilities. The precedent transaction analysis means digging through old deal documents, press releases, and SEC filings to find comparable synergy numbers, a task that is part research, part archaeology. And a new LBO model? That's building a new valuation from scratch. This isn't a 1-hour job. This is a 4 to 5 hour job minimum, and it needs to be flawless. "I've already gone through the deck and marked it up with some other comments and thoughts," the VP says, his voice still unnervingly calm. "I just sent it over. Can you turn these and get me a new draft back by, say, 5:30 a.m.? I want to have time to review it and get a final version to the MD before he presents it to the client at 7. There it is. The deadline. 5:30 a.m. It's currently 1:15 a.m. 4 hours and 15 minutes to perform open heart surgery on a 100-page presentation. "Yeah, absolutely. On it right now," you say. Your voice is a flat, robotic monotone. The adrenaline is already starting to kick in, a chemical replacement for the sleep you will not be getting. You hang up and turn to your monitor. The email is there. The attachment is a 98-megabyte PDF. You click it open. It's the presentation you just spent 16 hours of your life perfecting. But now it looks like it's been bled on. It's covered in digital red ink. Dozens and dozens of comments, Notes and markups from the VP. Little yellow sticky notes hover over charts. Lines are crossed out. Arrows point from one section to another.
Disclaimer. The information presented is for informational purposes only and is not professional financial, investment, or tax advice. All investments involve risk and may result in partial or total loss. You should always conduct your own research and consult with a qualified financial professional before making any financial decisions. By viewing this video, you agree not to hold the creator liable for any loss or damage arising from your use of the information provided.
It's a roadmap to your personal hell for the next 4 hours. This is the real work of an investment banking analyst. It's not the glamour you see in movies. It's this. It's called turning comments. It's the process of taking a senior banker's feedback, which can range from a brilliant strategic insight to a pedantic obsession with the placement of a comma, and flawlessly integrating it into the materials. You unpack your bag, the dream of sleep now a distant mocking memory. You pull your laptop back out, plug it in and line up the tools of your trade. On one monitor, the blood-soaked PDF. On the second, the master PowerPoint file. On the third, the labyrinthine Excel model that powers all the numbers. You start with the biggest task, the new analysis. The LBO model. LBO stands for leveraged buyout. It's how a private equity firm would look at the deal. They use a ton of debt to buy the company, use the company's own cash flow to pay down that debt over a few years, and then sell it for a profit. Your job is to build a simplified model of that process to show the CEO what a private equity buyer might be willing to pay, which serves as a floor for the company's valuation. You open a new Excel sheet. The blinking cursor on cell A1 feels like it's judging you. You start building line by line. Sources and uses. Pro forma balance sheet. Debt schedule. Cash flow waterfall. Each formula is a complex web of logic, linking dozens of cells together. One wrong sign, one misplaced parenthesis, and the whole thing collapses. You're not just plugging in numbers, you're constructing a delicate, intricate financial machine. All while a clock in the corner of your screen ticks relentlessly towards 5:30 a.m. Next, the synergy sensitivity analysis. You go back into the main merger model, a spreadsheet with so many tabs it looks like an accordion. You find the synergy assumptions, the numbers you and your team had so carefully researched and debated. Now, you have to create scenarios. You build a data table where the rows are your cost synergy assumptions 100%, 90%, 80%, all the way down to 50%, and the columns are revenue synergy assumptions. The model whirs and calculates, spitting out a grid of numbers showing how the deal's profitability, its accretion to earnings per share, changes with each tick down in expected savings. This single table will give the CEO the ammunition he needs to defend the deal to his investors. It's about managing perception, about controlling the narrative. As you're deep in Excel hell, you see movement out of the corner of your eye. It's another analyst, Sarah, from the Industrials Group. She walks to the pantry, her shoulders slumped. She gives you a tired, knowing look. It's a look that says, "You too, huh?" You nod back. No words are needed. There are a handful of you scattered across the floor, ghosts in the corporate machine, each fighting your own deadline. There's a strange, unspoken bond between the 3 a.m. warriors. A shared understanding of the absurdity and the intensity of the job. You finish the Excel work around 4 a.m. Now for the hard part, making it look good. You copy and paste the charts and tables into PowerPoint. But it's not that simple. Everything has to be perfectly formatted. You can't just paste as a picture. It has to be editable. The colors have to match the bank's official template, Bainbridge blue, not royal blue. The font has to be Calibri size 9. The chart titles must be bolded. The source note at the bottom must be italicized, size 8. Every line must be the right thickness. Every logo must be perfectly spaced. This meticulous, obsessive attention to detail seems insane to an outsider. But it's about signaling. It's about telling the client, without words, that if we are this careful about the font size on page 78, imagine how careful we are with the multi-billion-dollar valuation. It's a performance of perfection. Any mistake, even a tiny one, shatters the illusion. It introduces doubt. And in the world of 9-figure transactions, doubt is a cancer. By 5:15 a.m., you've addressed every single red mark on the PDF. You've created the new slides, updated the old ones, and triple-checked every number. Your eyes are burning. Your back aches. You've been fueled for the last 4 hours by a stale energy bar and a cold cup of coffee. You do one final pass-through, clicking through the deck from beginning to end, hunting for any lingering error. It looks good. It looks clean. It's ready. You draft an email to your VP. The subject line is simple: revised deck. In the body, you write a few bullet points summarizing the major changes you made, anticipating his questions. Attached is the updated presentation reflecting the CEO's requests. Specifically, I have included the LBO analysis on page 34 and the synergy sensitivity and benchmarking on pages 45 through 47. Please let me know if you have any questions. You attach the massive file. You hover your mouse over the send button. This is the moment of truth. The moment you release your work into the wild to be judged by the next person up the food chain. You click. The email is gone. It's 5:28 a.m. 2 minutes to spare. A profound, hollow exhaustion washes over you. You lean back in your chair and stare at the ceiling. For a brief, fleeting moment, you think you might actually get to go home. You watch your inbox, waiting for a "thanks, looks great" reply. You know it's a foolish hope, but you hope it anyway. The minutes tick by. 5:30. 5:35. 5:40. The silence is deafening. Then the chime. A new email. It's from the VP. Your eyes jump to the preview. There's no text. Just an attachment. It's the file you just sent him. But the file name is different now. It has a new suffix. V2_comments. Version 2. He's already gone through it. And he has more comments. You open the file. Your screen is flooded with red. It's not just a few comments. It's a massacre. Digital sticky notes cover your charts. Entire paragraphs of text are struck through. Arrows point from one slide to another with notes like, "This data contradicts the point on slide 19. Reconcile. This isn't a touch-up. This is a complete teardown." V2 doesn't mean version 2. It means you're starting over. You scroll through, your heart sinking with each flick of the mouse wheel. The comments aren't simple typos or formatting fixes, though there are plenty of those. They're fundamental challenges to your work. A bright red box is drawn around the valuation summary on slide 42. The comment from the VP reads, "Why are we using a 12.5x EBITDA multiple? The market has softened. Pull the comps from the last 6 months, not 12. I want to see a new football field chart with a tighter, more defensible range. And show your work in the appendix." Just that one comment isn't a 10-minute fix. It means going back into FactSet or Bloomberg, redefining your peer group, pulling all the latest financial data and transaction multiples for a dozen different companies. It means updating your Excel model, which has thousands of interconnected cells. Changing that one input will have a cascading effect, altering every single valuation output. The football field chart, which took you 3 hours to build the first time, now has to be completely rebuilt from scratch. That one comment is, at minimum, another 90 minutes of work. You keep scrolling. Another comment on a slide about market growth. Source? This industry report is from a no-name firm. We pay $250,000 a year for Gartner and Forrester subscriptions. Use them. I want a chart showing year-over-year growth, segmented by geography, with a CAGR calculation at the bottom. And make sure the colors match our bank's official style guide. So now you're a data librarian. You have to log into a separate portal, navigate a clunky interface, find the right report, and pray the data you need is in there. Then you have to export it, clean it up in Excel, and build a brand new, perfectly formatted chart that tells the story the VP wants to see. Another hour gone. And then you see the classics. The comments that are whispered about like horror stories by junior bankers. On a slide dense with text, a single word is circled in red. The comment simply says, "Rephrase." Rephrase to what? More impactful? More defensive? Shorter? Longer? You have no idea. It's a riddle. You have to try and get inside your VP's head, understand his cadence, his pet peeves, and intuit what he means. And the most infamous of all, a tiny, almost imperceptible comment on slide 73. The period at the end of this bullet point is Arial font, but the rest of the text is Times New Roman. Check the entire 85-page deck. Every single period. Make them all Times New Roman. Your brain short-circuits for a second. Is he serious? He's serious. This isn't about the period. It's a test. It's a test of your attention to detail, your willingness to do the most mind-numbing, soul-crushing work imaginable to achieve absolute, flawless perfection. Because if you miss a period, the client might wonder, what else did you miss in the multi-billion-dollar valuation model? It's a proxy for your discipline. And it's your job to hunt down every last rogue period and fix it. You feel a presence beside you. It's the associate. He leans over, looking at your screen and lets out a low whistle. He's not surprised. He's seen this 1,000 times. He points at the comment about the EBITDA multiple. Don't just pull the comps, he says, his voice low. He's not just asking for new data. He's testing our narrative. The market is getting shaky, so our valuation needs to look more conservative, more bulletproof. When you rebuild the football field, make sure our proposed offer price lands in the upper third of that new tighter range. It'll make it look like a premium, but a smart one. He's translating. He's the VP whisperer. He points to the rephrase comment. That means he thinks the sentence sounds weak. He hates words like could or might. Change it to this strategic acquisition will unlock significant synergies. Use active, confident language. Sell the story. Then he looks at the comment about the period. He almost smiles. Welcome to the show, he says. There's a shortcut for that. Go to Find and Replace. Search for a period in Arial, replace with a period in Times New Roman. It'll take you 5 minutes. But then you have to manually scroll through the entire deck anyway, just in case. He will find it if you miss one. This is the job. It's not just crunching numbers. It's deciphering a hidden language of edits and comments. It's understanding the politics, the personalities, and the unwritten rules. Your associate is your lifeline, your guide through this labyrinth. He gives your shoulder a quick pat. All right, let's divide and conquer. You rebuild the valuation model and the charts. I'll start hunting for that market data and work on the wording for the narrative slides. We turn this around in 2 hours. Go. And just like that, the mission is clear. The overwhelming panic is replaced by a surge of adrenaline. It's you and your team against the clock, against the deck. The next 2 hours are a blur of frantic, focused energy. Your world shrinks to the glow of your 3 monitors. On the left, the beast of an Excel model. You're navigating through tabs with names like DCF_model, comps_analysis, and accretion_dilution. You plug in the new numbers and the model recalculates, cells flashing as billions of dollars shift based on your new assumptions. On the center screen is the PowerPoint deck. You're a surgeon, carefully excising old charts and transplanting new ones. You're meticulously aligning logos, text boxes, and footnotes. You live by the alignment tools, ensuring every object on the page is perfectly distributed, perfectly centered. You become obsessed with the tiny details, the exact RGB codes for your bank's shade of blue, the precise font size for a subheading versus a footnote. Your right screen is a constant stream of communication, emails and instant messages from the associate. Found the Gartner report, sending it now. How's the model coming? VP wants to see it before he leaves. The pressure is immense, but it's a shared pressure. You're not alone in this foxhole. The office, once a hive of activity, has grown quiet. The sounds of the city have faded. It's past midnight. The cleaning crew has already made their rounds, emptying your trash can, which is now full again with empty coffee cups and snack wrappers. But on your deal team's pod, the lights are on and the keyboards are still clicking. This is the engine room of Wall Street, and the engines are running at full throttle. Finally, at 1:38 a.m., it's done. Every comment has been addressed. Every chart rebuilt. Every period accounted for. You merge your changes with the associates. He does a final high-speed scroll through the entire deck, his eyes scanning for any final imperfections. He nods. It's clean. Send it. Your fingers hover over the keyboard. You attach the file, renaming it Project Titan Deck V3_internal. You draft the email to the VP. No fluff, just the facts. Attached is the updated presentation reflecting your comments. The model is also attached, ready to discuss when you are. You hit send, and the real torture begins. The waiting. You watch your screen, your eyes glued to your inbox. You refresh it. Nothing. You refresh it again. Nothing. You see the green dot next to the VP's name on the internal chat. He's active. He's seen the email. Your associate is watching his own screen just as intently. The silence is deafening. Seconds feel like minutes. Then the 3 little dots appear. The VP is typing. Your blood runs cold. This is it. This is the moment that determines whether you go home, or if you're here until sunrise working on version 4. The message lands. It's not a sentence. It's a volley of shrapnel. Good start. Need to see the accretion/dilution on a football field. Add sensitivity tables for synergies, 5 to 25% in 2.5% increments. MD also wants a full pro forma credit stats page. Let's get a fresh version for the morning. It's 11:37 p.m. The morning is now. There's no anger. There's no frustration. Those emotions burned out months ago. There is only a cold, quiet acceptance. A deep internal sigh that makes no sound. This is the job you signed up for. This is the fine print made real. You simply reply, "On it." The first thing you do is stand up, walk to the kitchen, and make another coffee. Not because you want it, but because it's a required tool like your keyboard or your mouse. The office, which felt empty before, now feels like a tomb. The fluorescent lights hum with an almost mocking consistency. The first hour, from midnight to 1 a.m., is a blur of mechanical work. You're building the new slides from scratch. A football field, for those who don't know, is just a chart that shows a range of possible values for a company, like the yard lines on a football field. It's meant to show at a glance what a fair price might be. Simple concept, maddening to create. Every bar, every label, every number has to be perfectly aligned, sourced, and double-checked. You're not just an analyst. You are a graphic designer, a data entry clerk, and a human calculator all at once. From 1 a.m. to 3 a.m., you're in the engine room. The accretion/dilution model. This is the heart of the deal. It answers the most important question. If the buyer pays this much for the seller, will their earnings per share go up or down? Creative means it goes up, good. Dilutive means it goes down, bad. You're now running dozens of scenarios. What if revenue synergies are only 10%? What if we have to issue more debt? Each scenario is a cascade of changes through a spreadsheet with thousands of formulas. One wrong link, one misplaced negative sign, and the entire output is garbage. Your eyes burn. You start seeing the grid of Excel cells when you blink. This is the part of the night where the caffeine stops being a stimulant and starts being the only thing keeping your consciousness tethered to your body. You're not thinking anymore. You're just executing commands your brain stored hours ago. At 3:30 a.m. you hit the wall. It's a physical sensation. Your vision blurs for a second, your thoughts turn to mud. This is the most dangerous moment. This is when mistakes happen. You stand up again. You walk a lap around the entire floor. You pass the dark offices of the managing directors, the people sleeping soundly in their multi-million-dollar homes while you, the 23-year-old analyst, toil away to make their vision a reality. There's a strange beauty to the city at this hour. The endless grid of lights, once a symbol of energy and ambition, is now just a quiet, sleeping giant. You're one of the few people in this entire skyscraper who is still awake, still working. There's an odd sense of pride in that, a perverse feeling of being part of a secret club. The club of the sleepless, the grinders, the ones who get it done. You get back to your desk. The third wind kicks in. It's different from the second wind. The second wind is adrenaline. The third wind is a weird zen-like state of delirium. You're so tired that you're beyond tired. Your mind is strangely clear. You're just a vessel for the work. You build the pro forma credit stats page, outlining the new company's debt profile. You check every number against your model. Then you check it again. Then a third time. You format the entire deck. You make sure the company logos are the right resolution. You ensure the font is consistent on all 78 slides. You check the page numbers. You write the email to the VP. It's a work of art in its own right. Concise, professional, devoid of any emotion or hint of the ordeal you just endured. Subject: Project Titan Updated Materials, V4. Body: VP. Attached is the updated deck reflecting your comments. All numbers tied to the model also attached. Please let me know if you have any questions. Best Analyst. It's 5:18 a.m. You hit send. The whoosh sound from your speakers is the loudest thing you've heard in hours. And then silence. You just sit there staring at the screen. You've given your entire night to this. Your entire being. The response comes back in less than 90 seconds. A testament to the fact that your VP is also awake or has his phone surgically attached to his hand. The message contains a single word: Pitch-X. That's it. That's your reward. Not a great job. Not a thank you for staying up all night. Just X. And you know what? It's enough. It means the work was acceptable. It means you can go home. You slowly pack your bag. You put on the jacket you took off 10 hours ago. You walk out of the office. The air conditioning of the building gives way to the thick, humid air of a New York City summer morning. The sky is a pale, bruised purple. The first delivery trucks are rumbling down the avenues. A few early morning joggers are already out. The city is waking up and you're just going to bed. You get in an Uber. You lean your head against the cool glass of the window and watch the world come to life in reverse. You get to your apartment at 6 a.m. The sun is up. You walk in, drop your bag on the floor, and collapse onto your bed, still in your wrinkled suit. You don't even have the energy to pull the covers back. You set an alarm on your phone for 9:30 a.m. because the MD will be in the office by 8, he'll review V4, and he will have comments, and the whole cycle will begin again. So why? Why would anyone on earth do this? Why would they trade their sleep, their health, their youth for this? It's the question everyone asks. The answer is a paradox. You do it precisely because it's so hard. You do it for the money, yes. Let's not pretend otherwise. The compensation is astronomical for someone in their early 20s, and it puts you on a financial trajectory that is simply unimaginable for 99% of your peers. But if it were just the money, the system would collapse. People would burn out and leave in droves. No, you do it for the sheer velocity of the learning curve. You learn more about finance, business, and strategy in 1 year of investment banking than you would in a decade of a normal corporate job. It's a trial by fire that forges you into a different caliber of professional. You do it for the doors it opens. Banking isn't the destination. It's the launch pad. The analyst who just pulled that all-nighter isn't planning to be an analyst forever. He's planning to be a partner at a private equity fund, a portfolio manager at a hedge fund, or the founder of his own company. This 2-year analyst program is the price of admission to that world. It's a credential that signals to the world that you are one of the smartest, most resilient, and hardest working people in the room. And finally, you do it for the challenge. For the quiet pride of surviving in one of the most competitive environments on the planet. You're working on deals that are on the front page of the Wall Street Journal. You're in the room where decisions that affect thousands of jobs and billions of dollars are being made. It's an addiction to the stakes, to the intensity, to the feeling of operating at the absolute limit of your capabilities. It's a brutal, all-consuming, and often dehumanizing job, but it's also a forge. It takes you apart and rebuilds you into something stronger, sharper, and more capable than you ever thought possible. You sacrifice your todays for the chance to completely own all of your tomorrows. The only real question is, how many of your todays are you willing to give up?
Disclaimer. The information presented is for informational purposes only and is not professional financial, investment, or tax advice. All investments involve risk and may result in partial or total loss. You should always conduct your own research and consult with a qualified financial professional before making any financial decisions. By viewing this video, you agree not to hold the creator liable for any loss or damage arising from your use of the information provided.